In recent financial news, three prominent banks, SVB, Silvergate, and Signature Bank, have experienced significant challenges that have resulted in their collapse. This article aims to provide a concise overview of the events leading to their downfall, highlighting key factors and implications. SVB collapse. SVB faced a crisis primarily due to reckless lending practices and a large exposure to high-risk assets. The bank had made substantial loans to unstable companies and failed to adequately assess credit risks. As economic conditions worsened, borrowers defaulted on their loans, leading to a sharp increase in non-performing assets. The bank's inability to recover these loans strained its capital reserves, ultimately causing its collapse. Silvergate Bank crisis. Silvergate Bank encountered a different set of challenges. It primarily served the cryptocurrency industry, providing banking services to digital asset companies and institutional investors. The collapse occurred due to a combination of factors, including regulatory uncertainties, market volatility, and the bank's overexposure to the cryptocurrency market. Signature Bank failure. Similar to SVB, Signature Bank experienced a collapse driven by imprudent lending practices. The bank aggressively pursued growth by lending to borrowers with weak creditworthiness, neglecting proper risk assessments. As economic conditions deteriorated and borrowers defaulted on loans, Signature Bank faced an overwhelming number of non-performing assets. With insufficient capital buffers, the bank failed to withstand the mounting losses, resulting in its collapse. Implications. The collapse of SVB, Silvergate, and Signature Bank has far-reaching implications for the financial sector and the broader economy. Investor confidence. These collapses erode investor confidence in the banking sector, leading to potential panic and a loss of trust in financial institutions. Such incidents highlight the importance of robust risk management and regulatory oversight to maintain stability. Deregulatory scrutiny. The failures may prompt regulators to tighten oversight and impose stricter regulations on lending practices and risk management in banks. This could affect the overall lending landscape and potentially lead to increased compliance costs for financial institutions. See economic impact. Bank collapses can have ripple effects on the economy as they disrupt credit flows, impede investment, and potentially lead to job losses. It is crucial for regulators and policymakers to monitor the situation closely to mitigate any adverse consequences. Conclusion. The collapses of SVB, Silvergate, and Signature Bank highlight the consequences of poor risk management, imprudent lending practices, and overexposure to volatile markets. These incidents serve as reminders for banks and regulators to prioritize robust risk assessments, maintain prudent lending standards, and ensure adequate capital reserves. By learning from these failures, the financial sector can strengthen its resilience and mitigate future systemic risks, fostering a more stable and trustworthy banking environment. If you like this, must subscribe, like, and share.